Hello friends, today I have got a very interesting subject, that is small investors mistakes. Now this is very interesting. I have got a lot of requests from my friends who are investing into markets, and they are facing these comments every day today, and they keep on telling us, but telling me, and it becomes very difficult to convince them. They eventually realize over a period of time that's called experience. So let's see this video. It has got very interesting information. Now, the basic title is Small Investors' Fortunes Can Shine If They Can Control Their Emotions. And that is true. Obviously, that's true. Now, the first slide is very interesting, which gives a person is banging his head because doing a lot of mistakes in markets and incurring into a lot of losses. Now, is this your evening expression after the trading day or after the investing day? Is this your expression? Most of the guys are facing this. Let's go to the other side. Now, the small investors are making mistakes on day-to-day basis. Let's discuss them one by one. This is based on my experience and the challenges which I've come across in so many years of investing or trading or whatever you call it. Yeah? The first one is buying shares in a business which you do not understand. Most of the people, they just invest in stocks which they don't know anything about. So that is a big mistake. Second one is expecting too much from the stock. Sometimes the stock gives 10%, but people are so greedy, they want 20%, 30%. Now you should understand, they're a bit confused over the investment horizon. Is your investment for a short term or a long term? So based on short term investments, you should book profits on the short term interval. Based on long term, then you should not look at the screen on a day-to-day basis, and you should wait for your targets, whatever your plan for the long term. Using money, third is using money you cannot afford to risk. So many people, when the markets are rising, everybody starts talking about stocks, and stocks starts rising about 20%, 30%, 40%, 50%, in fact 100% at times in a week's time or in a 15 days time. So people tend to get greedy and they take loans to invest into market. That is the biggest mistake they do. The fourth one is being driven by impatience. Now this is the comment which I came across today itself from a friend of mine. He was telling me he tends to sell early. That is a common mistake. It's not a mistake, but you should plan your investments or your buy triggers or your sell triggers, and then you execute as per your plans. Yeah. So if you are convinced to sell, then you should sell. If you're convinced to buy, you should buy. But sometimes you are greedy and you tend to buy at a higher price. Sometimes you tend to sell too early because of your experience. See, experience does help you a lot, but experience kills at times. That is, a bitter experience kills you at times. So you want to eventually decide on what is good and what is not good. Right? Learning, fifth one is learning about stocks to invest in from the wrong places. Many of the people get information from wrong places. That's the basic. Sometimes the informations are not correct, so stocks tends to go down. Yeah, following the crowd. Following the crowd in the sense you receive a lot of tips on the phones or through websites or through friends that buy this, buy that, and some people close their eyes and follow them. They follow the tips and sometimes get themselves trapped. Seventh one is averaging down. Yeah, this is one of the biggest blunder in market history which I have come across. Even the experts or even the investors who have been investing since years fall in this trap. For example, Yes Bank, Satyam, Idea, Unitech, all these four scripts, it were trading quite high. People kept on averaging it at a lower price, at a 20%, 25% dip, at a 50% dip, or at a 75% dip. Eventually, they ended up making losses. So, this is very important. Don't forget this ever. You average it, but then you average it at a price where you're convinced that the business is going to grow, you're convinced that the management is strong. So, things into consideration, you should do your homework in advance. Doing too little due diligence, this is the thing which, when you come across, when you cannot control your grid, when the stock is rising by 10%, you buy it at the most higher price, and then the stock goes down and you're into losses in short time. This is when you cannot control your grid. Okay, investing based on single concept. This is like putting your all eggs in one basket, which you should never do. Nobody recommends you to do that unless you're confident of your investment decisions and your horizon of investment. You should always diversify your funds. Look at what Reliance is doing currently. It is into retail, it is into telecommunication. Before, it was known for its oil and gas business. Now it is known for its telecom business. Yeah? So this is how you need to diversify your funds. Now the solutions which I have come across in this experiences or on the discussions which we had as investors since so many years is, it is your hard-earned money. Okay, for example, when you go to buy a shirt, you visit so many places, you check according to your selection criteria like the quality, the price. There are a hell lot of criteria within to buy a small shirt or piece of shirt which is worth maybe 2,000 or 3,000 or 5,000. Yeah, but then when you're buying a stock, when you're doing an investment worth 2 lakhs, 3 lakhs, 4 lakhs, 5 lakhs, yeah, you don't think so much and you just blindly invest. That is not a correct way of doing it. So you should always do your homework. Yeah? Always do your homework nicely. Yeah? That is what the basic funda about investment is. Take your time, decide your entry, decide your exit, and plan your actions accordingly. Don't be impatient. If you can control your emotions, if you can control yourself, then obviously you can have solutions over your mistakes. Control your grid, control your emotions. Don't fall in love with any script. Take decisions based on your knowledge, homework, and present situation most of the times. Okay. Have faith in your investments. This is very important. You should have faith in your investments. Follow stop loss theories. Don't depend on stocks already sold. Always think of things that are in your hands. Some people tend to think which are not in hands. What you're dreaming about. That's called daydreaming. For example, we always tend to think of things which are not relevant to us, like we sold early and it's trading at 10 times. That's market. Market is full of opportunities. You miss one, you get another one. You miss one, you get another one. Okay, that's the way it comes. Yeah, and it's not going to stop. This is going to be an ever-ending process. Sometimes you think I was going to sell at quite higher price, and now it's near to zero. What's the point? Yeah, what's the point of thinking all this? Yeah, you're into a trade. You know your entry levels. You know your exit levels. Plan your actions accordingly. That's the basic funda. Okay, so everything is in your hands. The buy button, the sell button is always your own finger, which decides your brain, which decides the buy, the sell, yeah, and the fingers which execute the trade. So think twice before pressing the tiny buttons. One small mistake, yeah, one wrong decisions can destroy your life, and one right decision can change your life and markets. So always take time to decide on whatever you decide, and try to control your emotions. That's the most important thing. Now let's get to the other side. The common mistakes we help investors to avoid: regression, herding, narrow framing, false diversification, mental accounting, media response, anchoring, loss aversions. If you see this slide, you get an explanation, small explanation over all these things. Now I'm trying to, uh, if I make a big video, it is, I mean, people are losing interest and all. So I'm trying to shorten the video time and explain in detail what are best I can. Hope I have done the same thing in this video as well. So these are the small investor mistakes. Hope I have covered. Hope you like it. If there are any comments, you can write it down. And if there are any areas of improvement, you can also write it down. Thank you, friends.